There will always be resistance to change when people are so used to the way things are, but then are ultimately faced with the inevitability of change. As investors, we must be smart about predicting shifts in the norm and of emerging industries. One industry that has skyrocketed would be telehealth. In this video, I will show you how to invest in telehealth and telemedicine stocks. I will talk about yesterday's Q3 Teladoc earnings and Livongo earnings. I will also talk about the technology giants joining this industry. And finally, I will let you know which companies related to the health industry I invested my money in. With the rising of COVID-19 and the declaration of a pandemic, the health industry was forced to change and adapt to keep healthcare accessible to everyone. Additionally, by bringing services online, it automates the process of diagnosis and chronic disease management, allowing for a more organized workflow. These two telehealth stocks are leading the industry. If you are for this bull market to continue, smash the like button for the YouTube algorithm. It will help this channel to grow, and you will get this like from me. Since the beginning of the stay-at-home order in most countries, two companies have dominated the market and stood as seniors of the industry until their announcement of merging in August 2020. Despite the known trend of mergers and acquisitions failing, Teladoc Health and Livongo Health expect their new company to grow 30 to 40% in the next 2 to 3 years, a goal known to be achievable since they grew more than that annually as separate entities. But this is all in the short term. The biggest question now is how will they persist in the long term? When reviewing the success of companies, the discrepancy always lies in the integration of different company cultures and vision missions. While there are no defining parameters of survival, Livongo has a 94% loyalty rating from its customers, which is one comparable to Netflix. Teladoc merger with Livongo means that the company can grow to dominate the space as the leading end-to-end health provider with coaching and chronic disease management as part of its flagship services. Since they are healthcare providers, customers must be placed at the pivot point of their business decisions to ensure a high customer loyalty rating. But with the CEO of Teladoc taking control of the merger, it raises the concerns as well of the priorities of this new company, if customer satisfaction will be a driving point in decision making. Third quarter earnings announcements showed an increase in both Livongo and Teladoc's revenue, boasting 11% and 2.6% beyond the projected growth, respectively. Teladoc Health's revenue grew by 109% in comparison with the same quarter last year, while Livongo Health's revenue is growing even faster and has posted revenue growth of 126% year over year. Livongo closed with $106.1 million from their $46.6 million only last year. As for Teladoc, their revenue closed at $288 million from their $138 million the year prior. The number which I like even more is the growth of the US paid membership, which grew by 47% year over year. The number of visits increased by 206%. This is incredible growth. Teladoc Health still currently stands as the biggest traded telehealth company in the United States. For years, now they've exceeded their projections of sales expectations, growing from a $20 million company in 2013 to over $17 billion company this year. Admittedly, the pandemic did spur this on because by the end of second quarter this year, they had over 2.5 million virtual visits, tripling in visits from last year. Medical personnel are also playing it safer this way, feeling more comfortable by the fact that they aren't exposing patients to other potentially infected patients by using a shared room or leaving them vulnerable in the waiting room. It's only logical they uphold their responsibility to patients by creating a safer way to communicate. Even with the pandemic, telehealth was already a relevant industry in the years prior, because of the increase in efficiency they provided for the medical value chain. With the merger of Teladoc and Livongo, it now includes the use of artificial intelligence for the automation of chronic disease management. One example being diabetes management. Even before the acquisition deal, Livongo was already showing results in their customer acquisition, doubling their diabetes patients with only 1.2% diabetes market penetration. That shows how much potential is still there. With less than 2% of market share and then proving to be profitable at that point, what more when they grow with Teladoc? Separately, Teladoc projects $2.85 billion in revenue for 2024 and Livongo projects $1.8 billion that same year. With this big move into telehealth, it has attracted the eyes of both Google and Amazon. This year, Google invested $100 million in Amwell, once known as American Well. Since the company filed to go public, Google's investment was at the IPO price. With the partnership, Amwell will be shifting its services from Amazon to Google Cloud, from their video performance to building out their dedicated sales service for the expansion of Amwell's market share. Currently, major tech companies are heavily competing to sign up virtual healthcare services. Insurance plans and even hospitals are looking to make the shift to the cloud. Google's director of global healthcare said she expects businesses are shifting to use telehealth to improve benefits to employees, making reimbursements easier to handle and a much more feasible option. People nowadays are choosing to avoid physical appointments. This is shown by a 1000% increase in online appointments for Amwell. Some locations have achieved a growth of 3000% to 4000%. Revenue for this company increased by 77%. However, net loss tripled due to research and improvements to support their expansion. Amazon also expressed their interest following a silent move by Apple to invest in their wellness clinic. Amazon Care will include services like a virtual nurse, medication delivery, and app-controlled house calls for employees at home or work during appropriate work hours. They look forward to growing this and scaling the benefits beyond their Seattle employees. It is not a mystery that I am a long-term investor in Alphabet Google. Around a month ago, I also added shares of Teladoc to my stock portfolio. Additionally, I am an investor in Apple, and this company is getting to this industry as well. With the health and activity data collected by their Apple Watches, they will be a big player in this industry too. Just listen to the Apple CEO, Tim Cook.
If you zoom out into the future and you look back and you ask the question, what was Apple's greatest contribution to mankind? It will be about health.
If you want to be notified about my transactions in real time, check the link in the description of this video. Now is the time to invest in telehealth and digital disruption of the health industry due to its emergence as an important and relatively viable investment option. Its attention from big companies proves its potential as an industry with strong possibilities of profitability and growth with its integration with technology. In this day and age, it would be backwards to resist the benefits that come with automation and technological advancement when it could significantly decrease the chances of human error relying on human supervision. Given this information and with the current bull market, it's time to act fast and invest in innovative and high-quality businesses, especially ones looking to reshape the landscape of the human experience for medical care. You are awesome that you watched this video till the end. I have something extra for you. If you want to take your financial future in your hands, I compiled a list of 14 disruptive companies which are worth looking at in more detail. Identifying the main trends is where you can make significant profits. I analyzed 4 trends which might allow you to make good returns from the transformation of the economy. I also gave you examples of companies benefiting from these trends. I can see a significant probability of at least doubling the market capitalization of these companies in 3 to 5 years. Let me know in the comment section below which telehealth stock or a big tech giant getting into health industry would you like to own and why. Is it Teladoc, Livongo, Alphabet, Amazon or Apple? Or maybe some other name I have not talked about today. If you enjoyed this video, make sure to subscribe and click the bell to receive a notification about a new video being published. Thank you so much for watching, and until next time, happy investing!